Just because it's quiet right now doesn't mean we aren't going to see some fireworks. What we've got here is a chart of hi everybody, Courtney Smith here with our weekly video newsletter, TradeSmith. And what this chart shows here, the red line is the VIX. And the VIX measures what the market thinks the volatility is going to be. And as you can see, it's very, very low. Not quite as low as what we saw in October and November, but just barely a smidgen of a sliver higher than it was back then. Now, what happens typically is when the market takes a dip, the VIX goes up. But what this is telling us right now is that there's a lot of complacency in the market. Everybody's thinking, oh, everything's beautiful, everything's wonderful. I quite frankly think that they're beautiful and wonderful. But what I've learned is that after we go through a period of dullness, we go through a period of high volatility. So we might see a little bit of shake and bake sometime here in December, but I really think that we probably have about 30 days of calmness, and then we'll see maybe a 3 or 5% correction in January. Of course, we'll have to take a look at the situation once we get there. But we need to keep an eye on this because it's telling us too much complacency in the market. And when the market is too complacent, that usually means we're going to see a little spike-o-rama in volatility. The market will do what it has to do to screw you. All right, everybody, glad to be here. Glad I think we'll just leave this screen on for the next hour. That would probably be pretty good. All right. Couple things here. There's all kinds of little things going. Generally speaking, things are still very bullish, but there are, as always, some things that make me nervous. Let's take a look here at the S&P 500. First of all, the purple predictor is no longer bullish, but actually slightly bearish. Look at that thin green line underneath the price. That's the RSI. We saw the price make a new high close on Friday, but the RSI did not. And that divergence usually means that we'll see a couple or 3 down days. So look for the market to kind of retrace a little bit this week. One thing that makes me feel a little bit more bullish is that the volume is coming down on this dip. Dow Jones, I want to show this style of chart. Up at the top, you see the little thin green line is very high. That's the DI plus, and that shows a lot of buying pressure here in the Dow. The red line is very low. That's DI minus. That shows a lack of selling pressure in the market. So we're seeing a wide divergence here, and this is a pretty bullish factor for us to consider here. So this is bullish. Nasdaq, in this case, the purple predictor is bullish. Unlike the S&P, where it's kind of turned negative, it's still bullish here in the Nasdaq, which tells us that we're probably going to see those tech stocks continue to lead to the upside. Seasonality is bullish. I put the red line on there. If we break below the red line, that's at about 144 on the IWM, I'm going to turn off my green light, my green seasonal light. Now, right now, because the seasonality is bullish, I have double-sized positions on. So as this market is climbing, even though it's struggling, we're doing extremely well because we've got double-sized positions on due to the bullish seasonality. Seasonal patterns, we'll start to put on the new year here, but still, this is the best time of the year. Any pattern you can think about, you want to be long right now. Seasonality is bullish. The yield curve, as you can see, is just starting to peak. Now, this was what it was a year ago. Remember that the yield curve is a 1-year leading indicator. So it's going to start capping gains in a couple of weeks. Let's call it let's call it maybe in a week. We're going to start seeing that the market's going to struggle on the upside. It's not that just because the yield curve is going down doesn't mean it's a bear market, but it is going to make it hard for the market to go up. Asset allocation, on the other hand, shows that money is coming out of the bond market and into the stock market, and that's one of the reasons why we have this bull market. You know, people are always thinking, oh, you know, there's all this terrible news. terrible news, politics, war, famine, pestilence, the four horsemen of the apocalypse are running around. Why is the stock market going up? Well, there's a number of key reasons, one of which, as you can see, is people are getting out of the bond market, and that's new cash coming into the stock market. Our stock market RISKDICATOR, though, is suggesting people are not getting too frisky. They're not kind of saying, oh, let's be aggressive about the market. They're buying, but they're not buying with a lot of conviction. And that's one reason why this market is struggling right now, is this lack of conviction. Global shares popped a lot. They're actually now stronger than the U.S. shares. So I may start to look at some of these global shares a little bit closer in the coming week, because one of the key things, we get to go where the action is. We don't have to do anything. We can sit on our hands if we want to, but as a result, we can go where the action is. And it may be that the action is starting up here in these global shares. So I'm going to start taking a closer look at it. I started that this week. Here you can see the bonds are moving higher, purple predictor higher, and yet money's still flowing out of the bonds. So, well, you can see obviously Thursday, a lot of money flowed out of the bonds. But still, this is a bull market suggesting lower interest rates. Now, this was really, really interesting to me. For the first time in a very long time, all three of our key factors for the bond market are suggesting lower yields. First time in, months and months and months, all of them are suggesting lower yields. Now, the green line is the 10-year Treasury yield, and you can see it's actually going up. So look for bonds to now the yields to come down. And remember, this is the chart I just showed you. Look for this bull market to continue moving higher, because all of our key factors are suggesting lower interest rates. And of course, low interest rates mean higher prices. All right, let's take a look at our next chart. The dollar. The dollar came under pressure, as we were talking about, but we did see a little bit of strength here. Let me go back to this chart here. So interest rates stayed higher, okay? Interest rates stayed higher, even under pressure. The dollar, as a result, started to climb as money came out of other currencies and into the high-yielding dollar. But if the key factors are correct and we start to see lower interest rates, we probably are going to see the U.S. dollar go back under pressure very soon. Gold. This is something I've been talking about this for, several weeks, about how, why is it so weak in the face of bullish news? And when the dollar finally started to show a little bit of strength, the gold market just completely crapped out. We broke major support. We're probably going down to the old support at 1,200. This is a piece of garbage. I mean, really, we don't want to be in gold at all. Did I mention we don't want to be in gold? Probably want to be short because it did not react well to bullish news. A key thing when you want to analyze a market. It's not the news that's important. It's how does the market respond to the news. Also, all of our indicators are bearish on gold. Wow, this is unusual too. This is the first time we've seen this happen for months, at least since September. So this is pretty interesting as well. It's Katie bar the door. Gold is going down hard. Oil, we sniffed out 60. Like I say, I think it's going to be hard to get over 60. We'll just keep an eye on it. All right, freebies. Come on. What are you waiting for? It's a peanut to subscribe. Go to that website up at the very top there. Subscribe. You know you're going to love it. We're getting a lot of new subscribers because we've been crushing it in the market. All right, everybody. Thank you, freebies. Fully paid up members. Just hang in there for just a segundo.